Hey, what's going on, guys? My name is Alex, and this is the Equity Odyssey podcast. Today, I have the pleasure of interviewing Matt Burns, who is a managing partner at Proline Capital. They specialize in hard money loans and really that relationship side of things, and getting out there and doing site visits, helping managing scope of work. But I'll let him talk more about that. Matt, how you doing today?
Very good. How are you, Alex?
No, doing awesome, man. Appreciate you asking. So,
Yes, sir.
kind of like I was saying before, give us a little bit of backstory of what you're kind of currently doing right now with ProLend.
Yeah, so we started. I started private money lending with my own capital about 3.5 years ago. I had come out of the film industry in Atlanta. I did TV and film for about 12 years here, and kind of fell into the private money space through a series of crazy doors that opened for me. And so we started lending our own. I started lending my own money at that point. This is in 2020, and did a couple of deals, and then started seeing how the whole process went down, what we needed for security, and how to make that whole thing work. Once I kind of figured out the system for that, I started introducing it to some of my friends in the film industry. So I started pulling some investors in. Had about 2 or 3 guys we kind of did all the deals with for a while, and then once our capital ran out, we went back and got another 5 or 7 guys from the film industry. And that kind of led into us saying, hey, look, we can probably do a fund here and make this full time. And so in 2022, we engaged a SEC attorney here in Atlanta and got paperwork done for a fund. And so by early 2023, we had launched out and started Proline Capital. So.
Awesome, awesome. And was that your first kind of run in with real estate, or was there something prior with real estate?
No, it was. It was actually my first run with real estate was in 2020. So when the film industry shut down, it was March 13th, 2020 is when they let us go. I was trying to figure out what I was doing at that point, and one of my friends who was a camera operator on set with me, he had started a wholesale real estate company in 2018, and so he was running that simultaneous with his film industry stuff. And film industry is like 70 hours a week, so he wasn't really getting much traction with his real estate company at that point. And then when 2020 hit, he had this outlet to pour all of his time into, right? So by about June, he needed guys, and so I had known him for 15 years, and so he called me up, and I decided to just go join forces with him and see what it was about. And that was how I got introduced to private money lending, because I started seeing how he needed to close deals, and he'd have a gap in funding between
Mm.
when the investor could get their hard money loan and when he needed to close with the seller. So he would call private money lenders around Atlanta and say, "Hey, I need 200,000 wired in today, to escrow so we can close this deal, and then I'll give you 1% a week or whatever the rate was at that point." Because he would have a potentially $15,000 to $20,000 fee built in. So if he's paying $2,000 a month or a week for the interest, he can keep that going for a while before it cuts into all his profits. So
Right.
when I saw that, I went to him and said, "Hey, Chris, I have some capital in the bank from my years in the film industry. Let me give you the next loan that you need." And so that's how I started rolling into figuring out how to do private money lending.
Awesome, awesome. And so your buddy was running a wholesale operation, and you kind of joined in with him, saw this problem, and then you offered a solution, basically.
Yeah,
Cool.
yeah,
Just curious, what was your role in the did you like when you say join forces with him, were you working in the wholesale operation as well?
yeah. I started acquisitions, and I wasn't a lot of direct to seller kind of stuff, and I didn't really enjoy that a lot. So I went to dispositions pretty quick, and I loved the conversations with investors, because that was kind of my mindset as well.
Hmm.
So it was a lot easier for me, and then it also gave me a good platform once I started private money lending, where I had contacted a couple hundred investors in Atlanta area, and now I can reach out to them and say, hey, we're doing private money lending, and so that was kind of a good launch off point for me.
Yeah, that's awesome. That's awesome. I did a lot of acquisitions as well. Never got into dispo, but that's super cool. You already got to kind of build those relationships with buyers and stuff and people who might need your services. Um,
Yeah.
when you started doing the hard money lending, what were some of the early challenges that you ran into?
Um, well, I mean, the first one you run into is raising capital, right? I mean,
Yeah.
um, and we had some pretty good, roots into the film industry. So raising out of there was kind of our main pool. And I've done it for 12 years. My other partner, Sean, is still in the film industry, so he's been in it for 20 years. So we had a pretty strong base there as far as the trust level, because when you're on set, you kind of have to mesh as a team. So a lot of people you work with, you kind of build deep relationships with. But the problem with that was that in 2023 the strike happened, right? And so all this capital we thought was coming in kind of sat on the sidelines, right? So we had to pivot into other industries that we weren't as familiar with. So now we pivoted into a bit of the tech world, and doctors, chiropractors, that kind of stuff,
Hmm.
because it's a little more stable as far as them controlling their income. The film industry has been very transient. It's always been very transient, but in the last couple of years, it's just gotten so crazy with AI and stuff being introduced to it, and a lot of uncertainty going on in the industry. So
Totally, totally. So your initial avatar for raising money was kind of in the film industry, and then you started to branch out. Where do you typically find, or how do you attract people who you would ideally like to raise money from?
I mean, it's a combination of things, right? I mean, we go to a lot of networking events that have high net worth individuals, and a lot of that is also built on trust and relationship, right? I mean, you don't get invited to some of the things unless you have people that you know in those arenas. You can buy data lists just like you do in wholesaling,
Hmm.
and just kind of call through the list, and hopefully you find one out of 1,000 that invest with you, um, and just online. We're trying to build our social media presence and stuff. We actually switched. So in 2022, we were actually a 506. We set ourselves up as 506B, and because we knew that we had a lot of people in the film industry who were like me when I was in the film industry, making just under the accredited investor mark.
Gotcha.
So I wanted to kind of be able to include those guys in the fund. But then as we went along in 2023, and saw the strike happen and felt the effects of that, we kind of pivoted and switched to 506C, just because we didn't have any. If we're going to try to blaze new trails into new industries, we needed to have an outlet to advertise and get the word out there on social media as well. So
Gotcha. And the for the audience, 506C, that's a fund that you do need to be accredited, but it also lets you advertise. Am I correct
yes,
there?
yes,
Awesome.
sir.
Awesome. Okay, very
Yeah,
cool.
506B, you can take in unaccredited investors. Without you get a certain allocation of them. It's not unlimited, but you can bring in a certain amount of unaccredited per time. So
Yep. And for the audience, accredited investors, I believe, make over 200,000 a year, roughly, and
yeah,
400,000 or 300,000 if you're
it's
married.
$200,000 if you're filing separately, and 300,000 if you're filing jointly.
Gotcha. Yep. Yep. Okay. And that essentially just is a indication by the government that, hey, if you lose this money, it's not the end of the world, kind of thing, or what is that essentially what that is?
I mean, they're essentially saying if you have money, you're smarter, but
Okay.
which I don't subscribe to. I think that
Yeah.
that can be false sometimes, but that's essentially they're saying, yeah, you have more capital to risk to where it's not going to wipe you out, right? I mean, if somebody that makes 300 grand a year puts in 50,000 and loses it, as opposed to somebody who makes $75,000 a year, then that's a big difference as far as the impact in their financial state.
For sure. For sure. Okay. And what is the difference in terms of like, setting up the 506B or 506C in terms of like, the headache for, maybe fees or paperwork or anything like that? Are they significantly different or about the same?
Beast has a little more reporting to do. They're a little more difficult just because you're bringing in money that, um, again, it's not accredited investors, so there's more regulations around bringing in non-accredited into the funds. So there's a little more paperwork, but I mean, it's again, we were trying to accommodate people that were like us,
Hmm.
because I was making decent money, but I wasn't making over 200,000. but I still had money to invest. So I was trying to keep the doors open to people that were similar situation I was in.
Totally makes sense. And so now you can basically advertise. You can and you're on social media like you're saying. You're going to networking events, and you're doing outbound, which I think is awesome. Out of those, what's the most successful route, and what's that conversation look like?
Um, I mean, honestly, probably had most success in networking with people in other industries. You know what I mean?
Hmm.
Not within the real estate realm. I'm part of a couple of groups here in Atlanta. One is called Clifco. That is a really cool group that has eclectic people from around the nation, and I think when you present people with a good investment play that has a hard asset backing it, it's really attractive in this environment because there's a lot of variation in the markets and whatnot, and so it gives them a stable kind of platform where they can kind of see their return every month, and it's always consistent. So
Awesome, awesome. So do you look at it, the hard money business? Do you kind of look at it as like, I don't want to say two businesses in one, but there's the investor and they're kind of your client, and then there's also like the real estate investor, the flipper, I guess, and they're also your kind of client. How do you balance those two things? How do you know how much time to spend on each side of things?
yeah, I mean, a lot of it comes down to like a lot of my job is cash management, right? Trying to balance how much money we have in the bank versus how much money we're putting out. So the priorities switch occasionally. Like we're always looking at when we look at our overview, we're always trying to balance the interest of the investor with the interest of the borrower and the interest of the fund, right? So you have all these interests you're trying to balance out and keep in equilibrium. But when I'm working on a daily basis, sometimes the priorities switch because if you have $800,000 in the bank and you gotta get rid of it, if we pay our investors 10% annually,
Mm,
right? Paid out monthly. So if we're paying $80,000 a year on this money sitting in the bank, you're gonna start pounding the payment for borrowers at that point. So it just depends on which side of the equation we're on. If we have too many deals coming in and no capital, then we start going to pound the payment a little bit harder on the investor side. So
gotcha. That makes sense. Kind of just if it builds up, you're like, oh God, we're paying a lot right now. So cool,
yeah,
cool.
and when you get into I got friends that have funds that are 70 million to 150 million. Like when you get in those numbers and you're sitting on 5 to 10 million at any given
Oof.
time. I mean, the interest on that's pretty crushing. So
Yeah, that for sure. That's interesting. I never thought about that. Very cool. So there are, in in my estimation, at least in my experience, a lot of hard money lenders. Um, is that difficult to try to differentiate yourself, or what do you guys do that you feel, sets you apart from the rest?
yeah, it is. I mean, it just depends on what market you're playing in. I mean, in Atlanta, it's pretty competitive. There's a lot of hard money lenders here. Um, I think the one thing that separates us is that I have a partner in Atlanta here who's done real estate for 35 years in this space, and he's done about 600 flips or overseen 600 flips in his career. So he's seen pretty much a little bit of everything, and we try to be helpful to our borrowers as far as giving them value, coming in and trying to help make sure their plan is solid and make sure that they're going to succeed on the backside, and kind of give our thoughts as far as that goes. So we're open to doing first time, flippers, which some borrowers aren't, or some lenders are not, do not allow that. So I think we have more relationship based. Like we'll come on site with people and talk them through it, try to hold their hand a little bit if we need to. And then we have, also people that borrow that don't need any of that, and we still give them the same treatment, but some people don't need the advice and some people do. So
Wow, that's super awesome. So you'll go one, low experience investors, people who are trying to flip their first house and stuff. You guys are open to them. That's really cool. But not only that, you'll go and kind of help review the scope of work with them.
yeah, and we also do, so we do on our all properties, we don't do appraisals, but we do an inspection report. And so what we do is compare that against the scope of work they hand in, And let's say, on the inspection report, there's some foundational work, and on the scope of work, they didn't put anything in the, line item for foundational work. And so we'll say, hey, look, you need to get a quote here and see what those numbers are, and then just make sure that the deal still makes sense and there's some margin there still after you fix the foundational stuff. So
That's huge. That's
yeah,
crazy. I don't want to say. I guess I can't say it. I wish I had someone like that on. Honestly, on a couple of my first deals, because there was stuff that you just don't know what you don't know, and you make
yeah,
mistakes, and it can be crushing for sure. So having something like that, honestly, just a second set of eyes is crazy. Like that's so valuable that you guys do that. That's awesome.
yeah. And like I said, my partner, like, he signs off on all the deals, so having his eyes on everything has been really instrumental, because when you do 600 flips or oversee 600 flips, you've seen pretty much every single issue
Yeah.
that can come up, and so you have a different perspective than somebody who's just been doing it for a couple months.
Yep. Yep. Those 600 flips, was that Atlanta area, or where was that?
Yeah, it was all Atlanta. He's done. I mean, he's done pretty much everything throughout his career. But he's done new construction. He's done fix and flips. He's done buy and holds. He's actually doing a self storage ground up in Atlanta here. That's a 95,000 square foot facility that'll be up in about a year and a half. So
Awesome. That's super awesome. Um, so that's where you're at right now. You're really specializing, and would you say that's like your ideal avatar? It's kind of newer investor, first time, or is there somebody else that's your ideal?
I mean, our deal is to get a little bit of everything, right? I mean, we like to have new investors, and then we like to have people who are doing a couple flips,
Hmm.
4 to 5 flips a year, to where we have a solid base of borrowers coming in. And then, eventually, we have a thing on our PPM that states that we can't put more than 20% of our fund into one property, just so we don't get top heavy
Hmm.
for our investors to mitigate risk. But eventually, when we get to a certain level, we'll look at doing small commercial and some of that stuff as well. So
Awesome. That was going to be my next question. What's the future hold? I'm very unfamiliar, but is there kind of like a similar hard money space, kind of when you get into larger, multifamily or commercial or things like that?
yeah, there's definitely, like, especially like bridge loans and stuff, right, are huge in that space. So we could originate some bridge loans in that space, and that's probably what the product we'd be looking at that point.
Gotcha. How far in the future is that?
That's probably 18 months out, I would think. So it's not super soon, but also kind of short medium term.
Yeah, totally, totally. And just kind of from my own curiosity too, is it you and your partner, or what does your team look like at ProLend?
Yeah, so I have two partners, Sean and Brandon. Brandon's the one that has done real estate for a long time, so I kind of lean on him to bring in resources on the networking side. Bringing in like deals and resources and stuff. We're trying to, right now we're trying to create a resource list for our borrowers that includes like GCs and agents and subs and all that kind of stuff that they need to kind of succeed, so that they can have access to all that and can kind of just call through a list if they need to find somebody for something. Um, and then on the other side, Sean, he's the one that's still in the film industry, so he helps me raise money. He came in as a capital raiser with me, and he is also part time. So it's basically I'm full time. They're both part time, and then we run it that way. Eventually the hope is that we'll all be full time in this thing,
Hmm.
if it's if it can sustain all of us. So
I want to just, I guess, briefly highlight, if I was listening to this 5 years ago or whatever, I might not have, realized how valuable some of these things are that you're offering or looking to do, like one, the site visits and reviewing the scope of work and having a vendor list. That's been a huge challenge for me, at least, is, finding contractors, and then, you know, finding the right contractor, because that's tough. There's a lot of contractors, and unfortunately, not all of them are excellent, and not all of them won't steal your money, and, and things like that, right? So,
Yeah,
That's super
yeah.
powerful that you're doing that.
It's a big problem in the industry for sure.
Yeah, and I
And
say that
we're
as a
trying to.
contractor, so no hate to contractors.
Yeah, we're trying to. Eventually, we're going to have an app that will have all those lists on one app for our borrowers, and then we're going to try to implement also something inside the app where they can get an automatic reply on a term sheet, within about 2 minutes. So if
Hmm.
they're on site somewhere and they're wondering how, what financing they can get on something, they can plug it in and get a I wouldn't say a full term sheet, but just a basic idea of what we would lend on that property. So
That's cool too. That's awesome. Give it just like a snapshot or rough idea of
yeah,
the terms and
exactly.
everything. That's awesome.
Because as you know, like the whole game in the investor world is speed, right? And
Yep.
and that's one thing we also kind of pride ourselves on is we can close, really quickly if the title is already clear and stuff. It's a 3 to 5 day close.
Hmm.
We've done one deal in Atlanta where it was a 26 hour was our fastest, I think.
Wow.
But we have a pretty responsive team as far as our inspectors and the people that work with us. So.
That's awesome. For people who don't or are unfamiliar with a lot of wholesale deals too, a large percentage of the time, it's kind of like timeline is super important. So having a hard money lender that can move is good news. That's awesome.
Yeah.
Uh, so question on your past mistakes, failures. Looking back at the real estate career, maybe starting 2020, what would you say is your biggest failure?
Well, I mean, failures aren't failures unless you stop, right? So
Yeah,
I'd say our biggest mistake.
there you go.
So I had a mentor in this space that kind of one of the private money lenders in Atlanta, my buddy used a lot. I started talking to her and asking her questions when I started in this thing. And she was lending at 100% of the time, and she was doing it based on trust, right? So it's people she knew, and she would give them 100% of whatever they needed to close. So if they needed $250,000 to close, she's bringing 250,000 to the table, right? So I was lending like this with my own money originally, and so me and my partner Sean got into a deal where we lent some money on a property in Athens here in Georgia, and we had I think 3 investors with us in this deal, and we let him on 100%. So he's bringing no skin to the game. So it makes it really easy to walk away, especially if you have more than one loan, and one of them you have 10 or 20% money into, and the other one you have zero. Like you're gonna walk away from the 0% loan 100% of the time. So we had this guy. He had the house in Athens, and it was kind of a drive for me, so I didn't get a chance to go to the property as often as I'd like. And so he let it sit there for 6 months, did nothing to the property, and we had to take it back. So we got it back pretty easily. Like Georgia has good laws for landlords or borrowers, and so we got back fairly easily and got it sold. But we lost $50,000 in between because of the fact we let it land at 100%. We had to incur lawyer fees and different things.
Hmm.
So we had a little deficiency on that, and so me and Sean talked, and we decided to make our investors whole. So we paid them as if nothing happened, right? And then we took the hit on our side. So we have personal guarantee on the property, so we still have, like, we're doing a payment plan with the guy, and he's still paying us. So we'll still recoup. That's what I like about real estate is you have multiple ways to get your money back, right? It's
Hmm.
not just one thing. Like if you have a deficiency, you still have personal guarantee. You can still get your money back. It just takes a little longer. So it'll be probably take another 24 months, and we'll get fully recouped. But that was a big learning lesson for us because at that point we're like, all right, we can't lend at 100% anymore. Even if we trust people or whatever. And so we switched our model at that point, and that's when we started lending at 70% LTV, which is what we currently sit at.
Gotcha, gotcha. 100% is that has to be a lot easier to sell investors on though when you say when you say
Oh
100%.
yeah, for sure.
I bet they're like, oh heck yeah, cool. Is there any restrictions on where the rest of that money comes from? Like, does it have to come from the flipper, or is it just doesn't matter?
No, they can get a second or something they want to. We require that we're in first position lien on all the
Hmm.
properties we do, and that has served us well. And we've seen, deals where seconds just get wiped out. And so, if I'm giving any lending advice to anybody out there, make sure you're in first position is my one thing. So.
Awesome. So a major way to protect yourself, first position loans, not at 100%. Is there any other ways that you recommend people protect themselves?
Well, getting personal guarantees on everything. So we require anybody who has more than 20% of the company we're lending to sign personal guarantees. And we only lend to either LLCs or corporations just because it makes it a little more of a defined line on if it's a consumer loan or not, if it went to court. So obviously, like we're lending in states where we can make commercial loans, but we can't make I can't do a primary mortgage, right?
Hmm.
So you need a license for primary mortgages. In the commercial space, you don't need licenses in a lot of states. But you have to just make sure you're making that a clear-cut line. We also make sure our borrowers all sign a paper that says that they understand that it's a commercial loan and not a primary mortgage loan, just to make sure that even if they say, because I mean people, and I've had stories of people where they made everything clear cut and the person still goes to court and says that they gave them a consumer loan, right? And tries to sue them. So just making sure you're kind of putting everything into writing that is necessary to just in case something goes wrong. So
Yeah, that's super smart. Awesome. And you were also telling me before we went live here, you guys or you're looking at kind of a really cool project on affordable housing and making a
yeah,
fund for that. Can you tell me a little bit about that?
yeah. So I started thinking about this about 8 months ago or so, and kind of felt like it'd be a cool idea in this environment. Everybody's obviously the affordability crisis is pretty large in big cities right now, especially Atlanta. And a lot of times, investors coming in and kind of pricing the neighborhoods out of their own neighborhoods and stuff. So I had an idea to start a fund, kind of sitting side by each with this fund with Proline Capital, that would give mortgages, primary mortgages, to people at either a very low interest or 0% interest rate, and we kind of be trying to focus on single family or single moms or unprivileged, and have a very kind of tight criteria for the application process. Um, but just recently, actually, the guy I was working for that I was referencing earlier, Chris, the guy that was in the film industry, we had breakfast, and he was saying that he was wanting to he has a fix and flip company as well, so he's wanting to start fixing and flipping houses and then selling those houses to underprivileged people at cost plus. So basically, just whatever he put into it plus 10%
Mm.
markup, and kind of keep prices in the neighborhood stable while improving the product where they're living. And so we're actually trying to start a little think tank of guys here in Atlanta who are doing affordable housing ventures and trying to figure out a model that would work to kind of roll out on a large scale basis in the city here, to where we can start making a dent in the affordable housing prices here. So
That's awesome. That's awesome. And is that kind of the stage you're at? Is it like just you right now we're gathering guys and resources and gals and kind of brainstorming. Okay.
yeah,
Any
exactly. And if anybody's interested in joining that kind of initiative, we're open to anybody, especially capital coming in to kind of help out in this process of getting this thing launched off the ground and working in the community. So
awesome. Awesome. And I imagine this would be there's probably 100 different ways to do it, but in my mind, it's kind of a charitable thing. Maybe if you're given a 0% interest loan, but the super cool idea. I love that. I love people who have like a vision for, you know, there's a problem and they use their skills, expertise, resources, and they attack that problem. So, to me, that's super cool that you're doing that.
thanks, Ben.
Yeah,
Yeah, and we're hoping to build an ecosystem that kind of it perpetuates itself in that area, so that even if one person in this group falls out or something or moves or whatever, like it still keeps going without, so it's not dependent on like one person to do all the pieces, right? And it just kind of keeps going, even if people come in and out as we go along. So
totally, totally. Um, is there someone in this field, maybe, maybe the affordable housing space or the hard money space, that you say you really admire? And is there a reason or so?
Um, yeah, there's a group out of Carolina called Rehab Wallet, and I'm friends with those guys over there, and they run a really good business. They're just they're also not just about the profit and stuff, and they have really good hearts. So I kind of look up to them in this space, and a lot of things they do are based more on helping out people than trying to just make money, right? So
In the affordable housing space, or are they hard money?
oh no, hard money. Sorry, were you asking about the affordable housing space?
Oh, either or. I was just curious if they're
Okay.
what do they do specifically that you admire?
They do a lot of community outreach. I mean, they're always involved in community initiatives in South Carolina area. Um, and just the way they treat people, right? I mean, like we kind of try to operate by a golden rule
Mhm.
at ProLend, and they do a really good job of that with their borrowers and their investors, right? So,
Awesome, very cool. What would you say is one key takeaway that somebody listening to this you really hope that they walk away with?
I would say that if they can walk away and just realize that if they can find something that helps other people out, typically if you can fulfill somebody else's needs, you're gonna have your own needs met too, and
Hmm.
I think that if we all kind of focused on that more than just making money, that we would all have a bigger impact in the end.
For sure, the go giver mentality. Um,
Exactly.
yeah, I
Yep.
love that. I love that.
Yep.
Very cool. Is there anything that you wish to ask that I didn't?
Um, no, but I can the one thing I'll point out before we leave is that so this is our logo behind me, right? Right here. So this logo is actually my family crest. So
Wow.
this is the Burns family crest from Ireland. And then I'm from Michigan originally, so I'm a Lions fan. So I put two lions on either side of the logo or of the family crest. So that's just a little insight into how the logo was created. So
That's awesome. That definitely makes it stand out a little bit. That's super cool. Super cool, man. Awesome. Do you guys have what would be the best place for people to find you? Whether maybe they've got some money they want to get 10% on, or if they are looking to do some real estate deals, where do they reach out to you and find you?
yeah, they can go to prolinecapital.com. We have a page there for investors and for our borrowers. And if they want to contact me directly, it's just matt@prolinecapital.com. And if they reach out, I can send them a portal. We have a borrower portal and an investor portal that can be sent to them, and they can get further information there. So
Awesome. Awesome, Matt. I appreciate you coming on and sharing your wisdom and your story and everything. And I would think the things that you're doing is really cool, and I really like your values, um, and I admire, I guess, the go-giver mentality, and I want to replicate that as well. So, man, I really appreciate you, and I'm glad you were able to come on.
thanks so much, Alex.
Yep.
Appreciate you.
All right, signing off, you
Bye.
guys.